All right, everybody, looks like we're going to have a small class for this session, so that is perfect. Before I get going, just in the chat, can you guys let me know if you've ever tried to convert SPY to SPX or if you're entirely fresh or where you're at in terms of current knowledge? I think that'll help me answer any specific questions you have. All right. We got one fresh. So I mean, out of everybody here, that's now we're sitting at least 20% of people sitting in the class right now don't know what's going on. Okay. So the number one thing, and I know Hassan does this, and a lot of people that trade SPX will trade this way. If you can see my screen, this is normally how I have my trade desk set up. So I'll do it three ways just for a little bit better understanding. On the far left, I'll usually have my SPY chart up. In the center, I'll have SPX up. And on the far right, I will be linking into my options contracts. Sorry. So that I can have them up and get a better idea of visualizing where the volume is on the contracts, where people are buying, where people are selling, etc. So the easiest way to think about a conversion from SPY to SPX is it's very close to just being a straight up 10x multiple. Now, for yourself, what I would recommend doing is once you have both charts up on your screen, you can just very easily go in and find today, for instance, what the high of our day was on SPY, right? So you can see up in the top, it's 449.23. And then what our high was on SPX, right? So 4503.31. Just from that, you can tell that it is not a perfect 10x multiple of what we're looking to do, but it is relatively close. And for this, no, this is just for people with the signals because normally we have issues with the SPX SPY conversion. I'll put it up on the thing, but I wanted to be more focused people that were actually taking the plays. And a lot of people that are actually trading in that section, Nick, are kind of lacking this information. So where was I? We can see that it's not a direct 10x multiple of what we're looking at, but we can get relatively close working that way. So, 10x from the high of today would be 4,492-ish. So you can see that we're about 10 plus 4, 5. Do the actual math here. 449.23 times 10 would be, 4,492.3, but you can see that the actual high on SPX was 4,503. So that is 11.7 difference. You will see sometimes that the SPY conversion to SPX, even on the charts, is not always perfect. There have been instances where I'm looking at the SPY chart and it looks like we're making a new low, but on the SPX chart, it does not look like we're making a low at the same time. I only find that periodically. Most of the time, they are almost the exact same, which makes sense, but sometimes that is not necessarily the case. So an instance of that would be here. So I'm looking at the 15-minute chart on both. And at noon, so 12 my time, so 12 PST, on the SPY chart, right, it would appear as though we have a little bit of bullish momentum on this doji candle, whereas on the SPX chart, you can see for the exact same time period, it is not reflecting the exact same way. So that looks bearish versus bullish. So this is a key reason when you are taking either SPY or SPX to warrant having up both of the charts at the exact same time. The next thing is you can get a pretty solid gauge of what one is in relation to the other. Like if we come down to earlier in the day, I could see that, okay, cool, we're holding, right around 445.2. And here was 4464. So still around that 11-point difference. But where this becomes a little bit trickier is when we dive into the options contracts themselves. So the beauty and the helpfulness of SPX is that there is more granularity in the options contracts than if we were looking at SPY. So when you're looking at SPY and you have a 10-point move, so let's say that you need to go 446 to 447. right? Let's just use this as an example. This is only one contract. You're either going to be taking the 446 or you are going to be taking the 447. But if you look at SPX, because it's broken down, so this is 10 points on SPX, but SPX has contracts every 5 points. That means that right here, you actually have, it's slightly slanted, so sorry. So between 446 and 447 on SPX, you actually have another contract that you can pick up. So you, rather than needing to complete this full move, if you're going to play SPX, could actually play somewhere in the middle, right? Which provides you a little bit more granularity when you're dealing with the contracts. Now, the issue with something like that, and I just have the 449 put for tomorrow and the 4,500 put up, for example, is that when we are looking at 449, so right now you can see that it is currently valued at $1.25 versus the 4,500, which is 11.6. It is slightly more expensive than 10x, just like we would expect for both of these contracts, even though 449 would have ended here, right? So we would have ended, 449 is still in the money as well, right, as the 4,500, right, naturally. Just barely, but still in the money. So both are only slightly in the money at close, yet the 4,500 is actually set up to be a little bit more expensive than SPX. So when we're looking at that, we're looking at the difference of $1.25 for the SPY contract, and we're looking at $11.60 for the SPX contract. So what we need to do and why, no, there's no passcode, it's just that link. So if we're looking, we're trying to convert from SPY to SPX, right? If we know that the dollar value in difference changes, right? So you can't just be like a clean 10x multiple. And then sometimes it's not always, like we gave in this instance, the exact same. The best way to manage something like this is to look at your chart, right? So let's say that we were looking to, and let's assume that we're not after hours, but let's assume that we were looking to take puts on this last candle of the day. So the 1245 candle. And if we were going to look on SPX, we could say, hey, we just rejected 4,500. I think the closest in the money play would be to take 4,500 puts, right? So that is the number that we're looking for. So let's say I'm signaling 4,500 puts or Hassan is signaling 4,500 puts, but you don't want to go in and spend, $1,100, $1,200 on an individual contract. So you would see where we are at on SPX, right? So right at 4,500. And then just all you need to do is look at the candle. You don't even need to think about any math involved. And you are really like presented with two options. Let's draw some boxes here. We're looking to take it here. And we need to look at the closest strikes that we would want to take to kind of provide a little bit of context. So if we know we want to take 4,500 put, we'd then come back over to the SPY chart and be like, well, I can't take a 4,500 put because that's that middle area really where we're at now, because we're still, close to 50 cents away from either strike. So I have the option to take 449 put, or I have the option to take 448 put. So this is where it gets a little bit complicated with determining which you're going to take. So on SPX, clearly we can move, 5 points in the blink of an eye. We can move 10 points in the blink of an eye. So 1 full point on SPY. But sometimes, depending on the time of day, this move might be too far away. We need to start to think of, is it realistic for me to be able to continue from my point of entry to the next strike point, especially if I'm going out of the money, given the time that we have, right? So if I'm taking 448 put, I need to move down 73 cents to even get to at the money. And then from there, my objective is to always try and pick strikes where I can go at least a full point in the money. So if you were to look at this and you wanted to take 448 put, realistically, your target should be 447 put. Now, given the price action today, if we were to take this here and we had an hour left, you'd say highly unlikely that we were able to do that. If we had 2 hours left, you'd probably still say that it's highly unlikely that we're able to complete this move, just given the previous movement of the day, the consolidation, and the overall, kind of lame range. 4 points, and we just had that slow trudge up in relation to some of the other days that we've had. Massive moves. So I'd be like, 448 might not be the best choice. I would probably take 449 because the likelihood of me getting to 448 in the money, right? So that's that 1 point that I'd be looking for, at that point is highly more likely than me getting 448 and hoping for 447, because that would require a whole 1.73, right? A whole $1.73 down. So they would be incredibly likely. But if we wanted to do the quick math version, right, we would just take 4,500 minus 10, right? So we get 49.90. And then what's the closest strike to that? Well, then we start at 44.90. Then we'd have the 449 strike. So that would be the easy way to do it. So I don't really have a text box here. One second. So we'd have 4,500 minus 10 divided by 10. That's going to give us, if we're looking at the downside, right, that's going to give us the strikes slightly above. If we're looking on the upside, that's going to give us the strikes slightly below where we're positioned. So this is probably the quickest way to do it. Now, the difference in these contracts when we're moving between SPX and SPY is that because we need a 10 times bigger move, really, because it's 1 point versus 10, to, you know, have that delta take full effect on the SPY contract, we need to go into it and be aware that when an SPX contract has the potential to move, you know, several hundred points very quickly, the SPY contract is going to move at a fraction of that speed. So we could be saying that we're taking something 20 points out of the money on SPX, which is 2 points out of the money on SPY. In order for that SPY contract to gain volatility, we are going to have to make an absolutely massive move. So if we are going to take a SPY play versus an SPX play, it's always going to be a safer bet for you to take something that is closer to at the money rather than further away. It'll have improved delta. The likelihood of you failing will be slightly less, I guess, depending on how close to at the money you are. But the way that I've been doing it is I've just been gearing my play, my positioning for the closest strike to at the money when I think we're going to move. Because if I go down here, right? So let's say the closest strike that I have is 4, 4, or 5. So the way that I've been playing lately is we come down to an area where I'm seeing support. What's the closest strike in there? I'd be looking to take 4, 4, 5. And then I'd ride that up because from the time I purchased the contract, I'm in the money, right? I don't necessarily need to worry about the contract going to zero so long as I stay above 4, 4, 5. Same with the inverse here. I would be looking to take 4, 4, 9 because we are already in the money. If I have justified that this is an area where I think we are going to start rejecting, that would be the play because I would still have no worry about this going to absolute zero unless we come back up and break that level. Sorry, somebody is cleaning China. Okay, so that's the general idea of this. But when we go into it, there are a lot of reasons why I actually prefer to play SPY over SPX. So let's assume that we have an account where we can justify buying $1,200 in a position. Okay, so the last thing that we ever want to do is, even if we can afford to take a position at $1,100, at $1,200, we don't want to be locked into just one individual contract when we are doing that. So if I can take 10 contracts for the price of one on SPY, this actually provides me a huge benefit, right? Especially when I'm playing with an account that can just purchase one SPX contract. If you ever see how I play, I love to be able to trim. I will never take a position if I'm only able to purchase one contract because that is not good practice. You are not able to lock in profit. And what you are doing is you're kind of backing yourself into a corner where you need to hit a home run or you're going to get burnt, right? That's what you're doing when you're only able to purchase one individual contract. I mean, if you want to set a stop at break even, sure, but you're going to see how quickly that moves against you if it goes the other way. That's assuming that you're going to immediately be green. I would rather be up 20%, be able to trim out 50% of my SPY contracts. So I've locked in some money. I've provided myself a little bit more of a cushion with that stop than to be just, here's the question for this. We always have runners and we always like to see things go several 100%, you know, makes you feel good, makes you feel like you've accomplished a trade. You can't do that if you only have one contract. You haven't secured money along the way. You're just risking it all to hit 100%. And even though you might do that 1 or 2 times, it's not going to be advantageous for the long term. That is not a smart way to try and trade. And it's also not smart to only have one contract. And then what? It goes 40%, you have a stop loss at break even. So rather than take that 40% because you only have one contract, you don't take it and you hope that it's going to go further, but then it comes down and ultimately you leave with nothing. It's like that's not a reality that you really face if you were to buy those 10 SPY contracts, right? You could have trimmed half at 40. And then even if you went back to break even, you'd still be up a total of 20% on the position. Does that make sense? So that's the trade-off. It's like if you can ever play anything that's super expensive, my rule of thumb is I don't ever take positions where I can't have more than 5 contracts, right? Having 2 contracts is not really enough in my mind. So it's like if you could buy one SPX, I would be getting 10 SPY, right? So you're looking at a very similar cost, but you now have 9 contracts that you can start to offload to be able to hold that last one to 300%. That's kind of the mentality here. So I see a lot of people that will go into Hassan's plays and they're playing on accounts where they can't really justify they can't really justify taking 10 contracts of SPX. So they're stuck with one and it's always going to be a 0 hero, right? It's also a lot easier. Like let's say you have 10 contracts of anything, you sell half. Now if you wanted to just break even on that, your stop loss could actually be negative, right? So there's advantages, especially to newer traders, to avoid, having $3,000 in 3 contracts. I use all the time frames, 15 and 30 in the 1 hour mostly. Uh, yeah, the speed exposure usually gives you a good picture of what contracts are going to be the best for you to take. However, sometimes the speed exposure is on contracts that are way out of the money and have no chance or opportunity of getting in the money. So unless you understand how to work with that, I wouldn't necessarily just rely on the contract value at the highest or largest speed. Nick, I know that you play both. Do you have anything that you want to add to this? It's pretty straightforward if you're just going to do, take it minus 10 divided by 10. Nick's gone. Oh, Nick doesn't have his mic plugged in. But also, that question isn't really directly related to converting SPX to SPY. Like the whole point of this is if you just go over this on a daily basis and you're like, hey, Hassan is taking whatever the fuck he'd be taking 4,500 here. You should be able to do this quick math and be like, well, it's either going to be 449 or 448, right? Easy. You should know that right off the bat. You should also have both charts up so you can make the same generalization. If you are trying to play SPX without having SPY up, you are missing out on so much information. SPX has no volume. SPX is not traded, right? SPX's value is not set up the same way that SPY's value is. If you go here, there is no volume on SPX. You can't see when one of these candles is kind of an outlier, right? You can't see when there was high volume or when there was low volume. You just see the candle structure. You should be having both of these up. You cannot see the time and sales on SPX, right? There is no time and sales. There's no transaction. You should be having both of these up every time that you are trading. I would recommend having it both up every time you're trading either one of them because it's easier to be like, oh, I'm getting to 4,500 or vice versa. Speak your piece.
You can hear me?
Yep.
So I think one of the biggest things that people that don't really want to deal with the quick moves on the zero DTE on SPX, but they want to still size like that, they can always slow down the speed of the contracts by playing SPY like 2 or 3 weeks out. The price wise will still be relatively the same as how Hassan plays like an SPX, and it will move slower for him if they want to, like they know the chart is holding, but they don't want to be down 30% on a zero DTE sizing that heavy. So they can maybe be down only 5 or 7% playing that far out.
Yeah, that works. I think that if people are necessarily concerned about the speed or movement of a contract, to me, that immediately is a red flag and goes to show that they should not be playing a 10x multiple of SPY,
Oh
right?
yeah,
You should
definitely.
learn, you should learn how to trade SPY before you trade SPX. Everybody is always drawn into this idea of quick money, but they don't really think about the downside, which is if you can make money that fast, you can lose that money just as fast, right? So if you aren't comfortable trading the slower speed SPY and you can't do this math off the top of your head and know what you're doing, you should just not be trading that until you get comfortable with this. This moves slower. You can still just buy one contract if you're trying to see how it moves, if you want to see how it works, so you can get comfortable with it. There is no point, and I would never recommend to anybody starting off your trading career sizing in, you know, several $1,000s into something that you don't quite understand yet. That is why I wanted to have this class, because I see it less frequently now, which is good, but I've definitely seen it a lot in the past where people are taking SPX plays, right? And they don't even understand that it's a 10x multiple of SPY to begin with. Being able to read the volume, being able to read the volume profile, being able to see the dark pool levels is very key to how I trade. This is the bread and butter. Once you understand this, making the jump to SPX is easy, right? Because it is the same thing. But taking SPX and not knowing the foundational knowledge of how SPY works or what to watch on SPY is only going to get you so far. And a lot of times it will just bring you heartbreak. So I'm happy I'm always there to answer questions. I'm usually in the chat all the time. Sometimes I do try and convert Hassan's SPX plays to SPY, but a lot of the times he's scalping. So it's a lot faster. So by the time I even tell you that, you find the contract, you purchase the contract, it will already be gone. What do you mean more sources? Oh, today I didn't even trade. I saw this immediately, right? So I saw us with the strong move down and then the hold. So I stopped watching the chart around 7:45. Yeah, so we've had a few talks on dark pool levels. I don't know if it necessarily warrants its own class. So dark pool levels are trades that go through. They're executed off market, so they will happen. Usually, you see the largest at the end of day, and I just treat them like levels. So as you can see, even when we came up to this 449.16, which is from must have been over a week ago, we immediately rejected. So I just use them literally as levels. If we're under it, watch it for even here, just happened again. Watch it for resistance. If we're over it, watch it for support. I actually set up a time limit on a lot of my trades. If I'm just going to be chopping around and I'm on a 0 DTE, it's like the further, where is it? Sorry, I'm going to get rid of these. For 0 DTE plays for me specifically, it's like the further this to the right we go. So the closer to the end of day, right? The less likely you are to get where you want, right? Because you are only operating until this line hits if you're playing 0 DT. Once that hits, it's fucking game over. So the further over we get, the less likely you are to make the move that you're hoping for. So after I sit and chop for a long enough time, I'll just end up calling it, right? That's something that you just have to learn as a trader. I know some people that set steadfast rules and they're sitting there um, and they'll be like, oh, cool. If I don't get the move I want in 15 minutes, I'm going to close it. Right. That's a different trading mentality than mine personally, but I know it does work for some people. You don't want to just be sitting in a trade that's you're going sideways and you need to move up or down. At some point, you yourself, as the trader, as the individual, need to make that call. It's like, do I think I have enough time to make this move? Because sometimes you'll see it. It's like I could have bought 449, right? Could have bought 449 call. But let's pull that up. I don't know if I can do it from today. So this is going to be tomorrow's 449 call. So there's still going to be some value on it. So it's not going to be as dramatic. Yeah. Can I do it for today? Yeah. Okay. So I could have bought 449 call here. I could have called the bottom, right? Absolutely called the bottom. But come on. As time goes on, the likelihood of us making that move becomes less and less. So let's say I bought it here, it's 8 something. I bought it for nothing. I bought it at 8 cents. And even though we came up to it eventually, I would have had to hold the entire day, even though we had hours of upper movement, right? So at some point in time, if you don't get the move that you want quick enough, sometimes it's better to just call it and don't let something go to zero, which this ultimately did. That would have been crazy. How do I use this? That's a whole different story. How do I use this with Trader Link? Because that's actually a breakdown of my trading style, which isn't really what this class is about. So we do have some resources that we're filming this week about more utilization stuff for the platform. But because they are two separate businesses at this point, I kind of want to keep all the information that we do on that run through the Trader Link side rather than the server side. We do have to keep a little bit of separation here. If you guys have questions, so here's the thing. When we go into a day like tomorrow, which I do anticipate to be choppy, but we pick back up on Thursday, let's say, and Thursday is a little bit better. I would add me in the chat if you have questions about this, because the only way that you're going to really dial in on this is application. You can watch a class and I can explain it to you, and you can be like, cool, I'm going to take the SPX number minus 10 divided by 10, and I'm going to get the SPY contract I need. And it kind of could be that easy, but doing it in repetition is going to get you further. And I am around to answer these questions. Nick is also around as well. So I think moving forward, those of you that are in this, please, when you see these plays, I would prefer it if you make your guess and then at me. So then I can tell you if you are right or wrong. I think that is a better teaching style than you just telling me to tell you what it is. You're never really going to learn that way. I mean, premium's going to move in a similar way, right? On SPX and SPY, it's just going to move about a tenth as fast. But the thing is, you because you're able to take those half point contracts on SPX, like I was saying, so the 4505 or 4515, which you can't on SPY because you need full movement, there is potential for you to get in the money faster. So once you're in the money, you're good. That's why I always try and pick contracts that I think have at least some potential to go in the money. But SPX premium is going to move significantly faster than SPY premium. You can offset that by purchasing more SPY contracts. I think that's pretty much it for me, Nick. I think that giving the breakdown is it's not an overly complicated thing, right? But a lot of people don't want to take the time to just watch both charts at the same time. So everybody, if you are not already watching SPY and SPX, if you're taking one or the other, I would highly recommend you do that. The only way that you're going to see the movements between them at this point for me, I can be looking at the SPX chart and know immediately the contract on SPY that I would want to take. But it's all about watching the movement of the underlying, which in this case is SPY. So don't be trading SPX if you're not looking at SPY, if there's one thing to take away from this class.
Thank you, Jarvis, for this class. Appreciate it.
Oh, no problem. All right, everybody. I will catch you tomorrow.